Hello, uranium friends. So, a look at some uranium names. Where are we at? And we'll take it from there. So, we're going to go off the cuff here a bit, but we'll check them out. So, firstly is URA. So, yeah, you have your fib poll from the absolute bottom here of March 2020 to this absolute top in November 2021. Those are your fibs. So, a healthy piece of consolidation. If you define it through Fibonacci retracements, we're still there. We're still good. You have a bit of a bull pennant going on here. The 38% retracement has not technically truly been breached yet, so all good on that front here on the monthly in this log scale. What can we glean as the positives is pretty much that at the moment. When we go to look at this volume profile here, we're kind of missing out. The point of control now has kind of is above us at this point. If I go and I pull these settings, let's get the exact point of control. You can, when you use these volume profile indicators, you can check the value area high, value area low, and a point of control. So if I do that, it gives us a little bit of a better look. And no surprise um, here with these metrics. So it's now closed below the point of control. Now, yeah, has it done it before? Yeah. But we are getting to a point where this 38% retracement lines up with this value area low, and we can see it here in the volume profile. So, we've got some work to do against this volume profile. So we've got a lot of supply that we're going to have to work through on the way back up. When is the way back up? Your guess is going to be as good as mine. But just for the purposes of visual, those are the value areas and the point of control. So again, we're back here in the monthly without those metrics here. And what do we see as we zoom in? Well, 200-day moving average has been the bane of our existence for quite some time, literally since May of 2022. So we're going into a year of this 200-day moving average that has been holding us up. Holding us down rather. We also have the other moving averages that are doing the same thing. So nothing great to report on that front. So the positive thing I can say here on this monthly chart is that uh, healthy consolidation as far as this bull pennant off of this bottom run is concerned. Um, so if you start to lose the 38% retracement, that's your yellow flag. If you start to hit this 50% retracement now, it's really a red flag. So we're kind of coming into yellow flag territory. Uh, we're still in a range. I mean, it's that simple. This range here has been broken, so now we're going to be looking down at these lows here to see how things react with URA. That's as much as I got to report on the weekly here. Much of the same deal. Nothing great about the ETFs at the moment, and it makes sense if the markets in general are very sideways, very choppy. Um, do we have more drawdown to go? Macro guys might say yes. I'm just going with these charts. So, this range has been breached, and now, we want to see how it reacts here at this 38% retracement. So, URA, a little bit of an issue. Uh, the daily chart, it showed a little bit of some positivity along the way. Um, we are technically still in a daily uptrend. Let's just zoom in fully here so we can get a better feel for it. Okay, so you've got your low, you have your high, you have a higher low, higher high, higher low, lower high. So, we lost this uptrend yet? No, we haven't. That will be determined when we get there. So, but what's happening now is that we're just kind of hopefully working our way into an EQ, and these levels here, this low of 1879 is like the must hold for us at the moment. Let me just delineate market for you on the chart there. So that is the low that my eyes are on at the moment to see um, if it holds. And there's nothing that says at the moment that it's going to. When you look back, we had some slight RSI divergence, and in my opinion, that's kind of resolved itself at this point. So I mean, you could probably say, all right, let me pull this trend line here and let's see if I can get that. A good trend line again has at least 3 touches on a solid candle, 1, 2, 3, really 4, and we've lost that upward sloping trend line as well. So, doesn't look great at the moment on the daily. We just have to see how it plays out. So, all things considered, positive vibes as far as this bull pennant is concerned on the monthly, because as far as the Fibonacci retracements are concerned, we haven't even breached the 38% yet. Yeah, slight breach here with a fairly large V-shaped bounce. Does that happen again? I don't know. I'm in the wait and see mode, as I've said for quite some time now. So that's the deal with URA. The 200-day moving average is keeping us down. The moving average stack is above us, acting as resistance. URNM is going to be very much the same type of deal as URA. Let's just get to this monthly for a second here. Yeah. Same deal, but what did we get here? Well, we're at the 50%. And even that's been technically breached. And you had this golden pocket bounce here. URA's got a lot more data in it, as the fund has been in existence for a much longer time. But regardless of that, our recent action since these highs, this is more of a red flag on URNM, and they URA and URNM tend to follow the same path, as they are basically in the same space, and they are kind of the bellwethers for the space. So, maybe if someone's questioning whether they should be, if I was in URA and I'm questioning whether I should stay there or maybe, pull out and wait for a new sign to help me determine, well, maybe URNM is something that I would be looking at to make that determination. Either way, red flag here, because the 50% retracement has been breached, and it has been breached multiple times. Nothing that says that this thing is going to recover anytime quick. We have to see what's going on with these lows here. On to the weekly, same type of deal. Weekly bear flag. Not much help here. 12 EMA is acting fully as resistance here. It's been doing so for quite some time. So, the first sign, I guess, maybe that things might be turning around here is let's get over that 12 EMA, that red line. Otherwise, we're looking down here. Volume profile, a lot of supply overhead for us now to be working our way through it. And, market dynamics are such that those people that are holding bags right now are basically so frustrated they're going to be saying to themselves, "Oh, let me get a decent bounce that I can get myself either break even or close to break even, or not have so much losses that I've been incurring." And they're going to be those bag holders are going to be another factor on the way back up. So it's going to be a choppy run on the way back up. The thing that might um, change that dynamic is some sort of insane catalyst that just gets a lot of funds to flow into the space in an expeditious manner. But in order for us to get going, you need to see not only the price action start to work its way up, but we need to see the volume ramp up. And we've been really basically below the 20-day moving average with the volume, which is at this orange line here. And when it's been above, it's usually the selling volume that's doing it. So, there's no good signs there. Much like URA on the daily, we have a daily uptrend that is, let's see, did we lose it? 2910? Yeah, 2909. So essentially a daily double bottom here. Um, it's a loss of the uptrend with no follow through. But again, nothing that's saying that, oh yeah, well, this is it, Um, RSI, nothing to report there. So, you know, just the way it is that it's still going down at the moment, and there's just no signs to tell me that it's coming up. So, U.UN, pretty solid trend line here, plenty of touches here that could say, okay, well, it's been the spot to hold, and that has been lost, and subsequently has been now acting as resistance. So on the weekly here, that's the deal. Much healthier as far as the Fibonacci retracements are concerned. So we're still dancing around this 23% retracement. Yeah, we've had a couple of hits at the 38% over here, uh, which have led to recoveries, with this trend line. But the dynamic is that the trend line has been lost, and this trend line has held since November of 2020. So that's a change that we need to take note of. So, that's one of those things that, as someone who's looking at charts and doing technical analysis, if you're a trend line person, you take note of this. All right. So we need to get over that again. We need to get back over that. We're much closer to the 200-day moving average here. We have a lot of the moving averages that are acting as resistance at the moment. We do have all of this volume shelf that is still acting as support. So these are some positive things. Let's see how it reacts at 1466. Uh, Not horrible, all things considered, with the rest of the space, especially the minor equities. And yeah, it's just did it lose its daily uptrend here? 1477, 1475. So again, yeah, another loss of this daily uptrend here. With no follow through. So let's wait to see. I'm waiting to see, is there going to be follow through? If this level is breached, then I'm going to be looking down here. But we start to lose it on the volume profile, and then we don't get a pickup in that profile until down here in the $14 range. So some work to do again on U.UN. Discount to NAV is probably around like 13 to 14% right now. Don't quote me on that. You can go look on Sprot's website to see exactly what it is. But that's the deal. Healthier on a monthly look as opposed to the mining ETFs. If you're making your metric based upon the fibs, you can still have some decent amount of drawdown here, and this would still be a fairly healthy Fibonacci retracement. So not the best, not the worst. Holding up better than the ETFs. CCJ monthly chart. One of the stronger names in the space, obviously, right? So we do have this triangle, and it's holding fairly well here so far. It's still within it. Just got to see how it reacts. We take a look at the daily, and uptrend. This double top here, straight into a drawdown, is a bit of a red flag, but you have some positives here that we haven't seen with the ETFs. We're still holding the 200-day moving average. We're still above the last daily swing low pivot, but we do have this moving average stack. Now, they've got earnings in their conference call coming up this week, Friday. Notoriously, they have been, um, something to keep an eye on. Yeah, there it's drawn down. This last earnings report was a very positive response. This last earnings report was a very positive, well, fairly positive response that got no follow through. This earnings report wasn't the best. So, we're in these chop zones. You can't make determinations that, oh, they're going to say something really great about long-term maybe they do. I mean, we know that CCJ is signing long-term contracts. They just signed a 5.7 million pound deal with Bulgaria. Um, there's a lot of positive things that are happening with CCJ in the space. They will continue to be the leader as far as I'm concerned. But we're in a risk-off environment, and that's the deal. So, but still the strongest name in the space at the moment. Uh, this is fine weekly consolidation. We just need to see this low hold. So, all eyes on 2373 area, 2375 area, 2370 area. That's what's going to be important for us at the moment. Um, But one could say, that's this weekly low is in because, it took it out. So let's see how it plays. I mean, things are tightening up here for sure. And, we got to watch CCJ, obviously, because it is a bellwether of the space. Denison, monthly chart. Again, we can, if you're making your fib pulls from these March 2020 lows, April, March 2020 lows, still fairly healthy. I mean, a lot of people don't like what's going on with Denison's um, price action, but Fibonacci says it's not horrible. Where do we do have a problem is here, right? So that we're starting to get into this volume profile where supply is, demand is dwindling. So if we start to breach out of these levels, um, it's not going to be a good deal. So, there's not a lot of support here on the monthly on the way down. So let's zoom in a little bit and see what we got. Yeah, it's the same deal. So, even on the weekly, if you start to lose this 90 cent level, it's problematic. The good thing is that from a technical candlestick charting standpoint, this weekly low here has been established. It's set for now. So it's really the key level to be watching on Denison is going to be 92 cents because, it got back up over this weekly high and continued on. Still have our 12 EMA, weekly 12 EMA that's holding us down. So that becomes the metric. We're still below the 200-day moving average. Denison has a hard time holding that 200-day moving average other than this beautiful run up. Other than that, it's been just dancing around it. And, when it uses it as support, it's decent. When it uses that as resistance, it's using it as resistance. So, you know, there are, people out there that'll just say, okay, when I get above the 200-day moving average, then it's a nice signal to get back in. I can't um, determine what everyone else does with their trading. So for me, it's this level here, this pivot here, which is 98. This weekly low, which is 92, is the be all end all for this. Was it? Where is this? Let's just get back to this weekly for a second. Yeah. So this weekly low here of 92 cents is the area that I will be watching intently. You have a bunch of touches there that say, all right, that's where it's bounced off of. If it doesn't bounce off of there, then then we know again things have changed, and there's going to be continuation of the bear trend. So, weekly bear flag. If you take another fib pull on this weekly here, and it's the 38% retracement that it's fighting with, which is lining up with this 12 EMA. So, this is the level for us to, start to say, okay, possibly maybe this weekly bear flag is being negated. Right now, it's not. It's a weekly bear flag. It's just that simple. Unfortunately, right? Next gen, Warren Irwin's favorite. Supposedly he just sold out of his entire position. Was that the thing that was putting this pressure on? Well, the whole space is going through the same deal. But again, on this monthly, if you have this fib pull and you're working off of fibs, it's there. These are, if you look at this volume profile, I mean, you start to lose a lot of support once this level breaks. Once this level breaks, this 339 level breaks, uh, support just kind of disappears. So, the space is in a make or break ranges on many of these on these big board names. So, it warrants caution. I'm personally not even attempting to make any purchases, adding to my positions at all at the moment because I want to see the trend actually change. So, listen, you get a good daily trend change here, but you lost it. And that's the deal. So if we lose this 350 um, level at the moment, we're confirming again that we have the daily is still in a downtrend. And then, 339 is going to say, all right, well, the weekly is still, this is still a weekly bear flag. It's just that simple. You run your fibs, and this is probably a 38% retracement up here, right at the 12 EMA. Let's just run it. I can see it visually, but I don't know if everyone else can. So, all right, 38% retracement's a bit above here, but that's the deal. It's still a weekly bull flag, and there's a lot saying that that's not that dynamic is not going to change anytime soon, unless you have volume and price moving in the right direction. So that's next gen UEC, same type of deal. Okay, so your monthly bull pennant, it's still basically alive, but you do have the trend reversing in all shapes and forms. So the key levels to be watching on UEC at the moment are going to be, this range is broken. You see these ranges break. Now you have to look to the next range. So the next range is down in here, and it's not much of a range at all. UEC, the bottom of this range, again, it's going to be $1.89, where this is the top of the range. They kind of line up together. If this level breaks here, you get this volume air pocket here. So then your next volume support is going to be down in the 190 range where all of this action has been occurring. So nothing good to report there as far as that's concerned. Still in a daily downtrend. No relief in sight yet. So, and it's lost this little daily pivot where there was some slight chance of hope, right? So you had a nice, pretty good fake out here, but the 12 EMA on the daily has been acting as resistance for quite some time and is still doing that. So your early signals will, for me, my early signal is going to be, all right, does it get above this daily 12 EMA, hold it, and then use it as support? That could be a sign for me that I might want to re-enter into a UEC position. Nothing has told me that I should be doing it, and I'm just watching at the moment. Energy fuels, you. Same type of deal on these monthly fibs for this entire run. Still fairly healthy consolidation as far as that's concerned. Again, these levels, all these charts are kind of doing and showing the same thing. So we zoom into the weekly here. Again, a weekly bear flag, looking like it's going to confirm into another leg down. So then it's going to start testing this area, this 432 area, where we have a little bit of a volume profile support. First things first, let's look at 470 area, hope that it holds, and hope that we get a little bit of a reversal. Uuuu has always been a little bit of a tough one, right? So same deal. It had a daily uptrend here. This is still a daily higher low. had the daily lower high, and then breached this daily. So it's lost the daily uptrend, and it's getting close to confirming a daily downtrend. So, I mean, you could call this a triple bottom, but technically it did breach, which confirms this 499. What is this? 501, 502. Yeah, so um, it's confirmed the daily downtrend with no follow through yet. So here's your lower high, here's your lower low. Let's see how it reacts into this area. But these ranges are really just kind of breaking down. Not the best, not the best looks on a lot of these things. So that's it for now on these names. Wait and watch. Over and out.